Hello everyone, we're going to start into this new section which is chapter 21, and this is a chapter called Applied Arithmetic, and basically what this is about is tax, VAT, bills, profit, loss, discounts. So students normally shrug their shoulders and turn their eyes to heaven when they see this sort of stuff, but this is something that you really need to know about, and this is real world maths. So a lot of students will often ask, oh, what's this got to do with real life? When am I ever going to use this? Well, this is the maths that you're actually going to use. So before we start into this chapter, there's a couple of things that you need to understand. So what we've got here in front of us is an Irish payslip. Now it's a made up payslip, it's not a real person, but we're going to have a look at a couple of things on it, and you need to be able to understand the terms. So you're going to hear terms like income tax, PRSI, USC, statutory deductions. You're going to hear a lot of these sort of words, and you may have done them before, maybe in business studies, but we're going to go through it from a maths point of view. So let's have a quick look at it. Here's your payslip, and it's got a lot of numbers and a lot of titles and things like that, but we're going to break it down very, very easily. So there is basically two numbers that I want to show you, and the first number that I want to show you is this number here in this box, and you can see this one says gross pay. Okay, and that's how much your employer gives you. So let's say you are working. So let's say, I don't know, you're working in a computer job or you're working in IT. So your employer gives you that. So that is your pay. But what you get paid and what you actually get landed into your bank account or into your pocket are two completely different numbers. So your gross pay is your pay that you get from the employer. So from your job. Now what actually lands in your bank account is down at the bottom here, which is this one, which is net pay. So this here is what arrives in your bank account. Now, most people are looking at that thinking to themselves, there's something wrong there. So A line C is shorthand for account, just if you're wondering what that means. So you're looking, hang on, this top gross pay up here is 5,200 euros in or abouts, nearly 5,300. But in your bank, you're only getting 2,700. So what happened the other, 2,500 euros? What happened now? Where did that go? Well, nearly all of that has gone to the government, and that's tax. So half your pay is not gone missing, but it's gone to the government. The government then take the money and they do stuff with it. What we're going to do is look at what they do with it and how they split your money up. And this is basically what tax is. You have to be able to read your pay slip to make sure that the government are taking out the right amount of money. Because often they'll make a mistake and they may be overcharging you. And if they're overcharging you, you're due to get some money back off them, and you could get a couple of grand off them. Sometimes they undercharge you, not too often, but if they do undercharge you, you may end up owing them money as well, which is also a position that you don't want to be in. So on this pay slip, we're going to have a look at a couple of titles and see what they mean. So this section in here is where all the details are. This is where all your money goes, and the government have it broken down. We won't be doing all of them. We'll only be looking at some of them. So the ones that we're going to be looking at here is this first one here, which is PAYE. We're going to be looking at the one underneath it, which is PRSI, and we're also going to have a look at USC. So they're the main three ones that we're actually going to be looking at. There is possibly a tax credit in there. So down the very, very bottom, you have this word here, which is tax credit and tax payable. So we need to look at that. There's a standard cut-off. We'll be looking at that. And then there'll be tax paid. So you'll be seeing all of these as we go along. So the first thing we're going to start with is the ones up at the top, which is PAYE, PRSI, and USC. And we're going to see what each one of these means. So we're going to start with PAYE. So what I'll do is I'm going to rub this out and we'll have a look at it here on the side. So there's a big difference in numbers there. Let's see where this money is going. So PAYE. Now PAYE is what's called pay as you earn. And pay as you earn is basically your income tax. So you may have heard the word income tax. This is it. So basically, the more income you make, the more tax you pay. That's essentially it. And PAYE, when they take it out, so you can see here in this one that you have paid €1,173.94. So in this particular bill, you've paid 1173. We leave out the dots at the end. You have given the government 1,173 out of your pay. Now, what are the government going to do with that? Well, this will pay for public services. So, for example, this would pay for anything to do with hospitals, doctors, nurses, physiotherapists, all that sort of stuff. Anything to do with the Gardaí, it pays the Gardaí salaries. Anything to do with education, teachers' salaries, building of schools, paying the bills in the schools, anything like that. That's what this goes on, public service. It also goes on other things, so running public services. So it pays the politicians. It also pays for the upkeep of government and the upkeep of all of these things here, like who pays the bills in the hospitals in terms of electricity bills and heating bills and food bills. And the same thing with school, who pays for the electricity in the school, who pays for the oil in the school, where does all that money come from? All of that money comes from PAYE, income tax, that everybody in the country, including the people that are in here, they pay as well. So everybody pays income tax. Not everybody pays the same amount of income tax, which is what we're going to see soon. The next thing that we're going to look at is PRSI. And PRSI stands for Pay-Related Social Insurance. And again, you don't need to know the basic breakdown of those words. So pay-related social insurance is money that's paid out to help people in society. The key word here is this one, which is the S, social. So this is to do with people and society. So in this one, you are paying a lot less, but still enough, €211.36. So we say €211. And this pays for old age pensions. So the pensions, which people, I think above 65, I think maybe is the number at the moment, anyone who gets a pension, old age pensioners. Also job seekers benefit, okay? So job seekers, and again, that's often called the dole or unemployment benefit. So just you may not know it as job seekers benefit. So that money goes into that. Also things like child benefit. So if you're in a family, your parents are getting child benefit up to the age of you are being 18. And that is money that's given to families to help families buy stuff for the young people in their family. You know, things that are expensive, shoes, school stuff, books, all that sort of stuff. So all of that in there is PRSI. The reason why it's classed as social is this is to help people in society. The next one then that we're going to actually have a look at is USC, and this is a tax. By the way, these are all taxes. A tax is just anywhere where the government takes money. So PAYE is just one type of tax. It's an income tax. PRSI is a social tax. And USC is the third type of tax, which was brought in relatively recently and within the last kind of 20, 25 years. And this is just extra income. So in this particular example, USC is coming in at 318. So €318. And this is just extra income for the government. And the government then used that. Then to pay for services and do different things. All right, so that's €318. So you can see when you get paid, you pay a lot of money to the government to run all the services. After that, on the pay slip, there's a couple of other bits and pieces. There's BIC, Med, and Car. That's probably someone in the business. There's someone here, they've got pension written down here. You can see that. That's their own separate pension. So they're paying into a pension plan. There's someone here with a thing called an AVC. That's something they pay in. So these are not necessary. You don't have to pay these ones here. It's just this person in this particular pay slip is paying for these. A pension means that you've got money after you retire. So people don't really want to be working when they're 75. So you need some sort of money to live on when you're 75. That's what the pension is for. The reason why people get an extra pension is because the old age pension that the government supply is generally not enough for people to survive on, although a lot of people do survive on it. An AVC is, again, another type of thing that you can, it's like insurance, you can put money aside each month and you can retire early. So this person's paying 150 euros into their pension. They're paying 150 euros into their ABC so they can retire a little bit earlier. Then you can see we've an obvious one here, which is health insurance. So in case you get sick and you end up in hospital and you need to see or get a surgery quick or something like that, you've got your health insurance. And then you've got PRSA, which we're not going to go into at the moment. So that's pretty much it. They're the three main types of taxes. What you're going to have to be able to do now in maths is you're going to have to be able to take someone's salary and work out their PAYE, work out their PRSI, and work out their USC. And you're going to have to work out the total tax that they have to pay to the government. And you're going to see how much money they end up with. So what I'm going to do down here is I'm going to take a quick example. I'm going to write down an example and I'll be back to you in 2 seconds and we will be able to explain these ones here at the bottom: tax payable, tax credit, standard cutoff point, and all that sort of stuff. Let's take a quick example. So here's our first question. Question 1. Joe's salary is 50,000 euros per annum. He pays 20% tax. And what is his gross pay, his tax payable, and his net pay? So what we're going to do is we're going to break this question down and have a look at a couple of things. You may know some of these already. So a couple of things is this first word, per annum. So per annum means per year. So every year he gets 50,000 euros. He pays 20% tax, right? So this here is his pay that he gets at the start of the year. He's paying 20% tax. Now, that 20% tax, this is just a beginner's question. There is different types of taxes, but let's say for the moment that he just has one type of tax and he gets charged 20%. So let's go down here and see if we can work it out. So how do we work it out? So first of all, the question's asking us what is his gross pay. So your gross pay is the amount of pay that you get from your employer that you're awarded for doing your job. That's not the pay that you get at the end in your bank account or in your pocket. Because remember, the tax has to be taken out of it. So Joe's gross pay here is 50,000 euros. That doesn't mean Joe's going to get 50,000 over a year. Joe's going to get a lot less of that because all the tax has to come out of it. But Joe is getting 50,000 a year from his employer, but Joe has to go and pay the taxes next. So number 2, we've got to work out his tax payable. So your tax payable is where you start doing some percentages. And it's really, really easy. So all you've got to do is take your gross pay, which is 50,000, and on your calculator, just multiply it by 20%. Now be careful, don't multiply it by 20, multiply it by 20%. To get your percentage sign, you're going to have to hit second function and one of the buttons at the bottom of the calculator. I think it might be 0 or 1, depending on the calculator that you use. So 50,000 multiplied by 20% should give you a number of 10,000. So your tax payable is 10,000. In other words, you're making 50 grand a year, but the government want 10,000 off you. Okay, that's your tax payable. Your net pay then is the last one that it asks for. So your net pay is what you actually get into your account. So your net pay is your gross pay, which is 50,000. So that's your pay, right, which is gross. You then have 10,000. You're going to have to take this away. The reason why is because this is going to the government in tax. The government are taking this off you. So what are you left with? You're left with 40 grand, 40,000. What you're left with in your pocket, in your bank account, is what's called your net pay. And it's as simple as that. That's the most basic example. You have your gross, you have your tax, you have your net. And that's that. Let's take another example. Let's move this down a bit. So here's our next question. Question 2. Jess has an annual salary of 40,000 euros. Her tax is 20%. And Jess has a tax credit of 3,000 euros. So there's something you haven't seen before. So let's highlight a couple of details here that we know what we're dealing with. So she's got an annual salary of 40,000 euros. She's got a tax of 20%. And then she has this new thing called a tax credit here. And the tax credit is 3,000 euros. And we'll look at that now in a second to see what that is. So we've got to work out her gross pay. We've got to work out her tax, or called gross tax, her tax payable and net pay. Now some people will be looking at these two things here and kind of going, What's the difference between gross tax and tax payable? Well, we'll have a look at that now. So we're starting with 40,000. So let's start laying things out. When you're laying things out, you need to write down exactly what you're dealing with. So 1, what is her gross pay? So her gross pay here is 40,000 euros from the question. That should be easy enough to work out. The next thing it's asking for you is the tax, or the gross tax. So your tax rate there is 20%. So what we're going to do is work out the gross tax. So gross tax is just another way of saying how much tax is worked out. So again, like you did in the previous question, it's going to be 40,000 multiplied by 20%. And you go work that out. So 40,000 multiplied by 20% is 8,000. And again, you can do that on the calculator, just make sure you work it out right. So gross tax is 8,000. So now the next thing you've got to do is work out tax payable. So I'm just going to highlight this just to show you what this is, right? So this here is her tax bill. This is her tax. This is what she should, according to the numbers, be paying. But then we have this thing up here called a tax credit. And what a tax credit is an amount of money that the government will let you away with. So basically, if your bill comes out to 8 grand, that's your tax bill, what they're actually going to do is let you away with 3,000 of it. So instead of paying 8,000 euros in tax, because you've got a tax credit, remember, credit is something good. Credit is something that you get. You get credit for your phone, or you get credit in a shop if you return something. So you're getting 3,000 euros back. So we draw a line underneath that, and that means instead of paying 8,000 in tax, you're actually only paying 5,000 in tax. So tax credit from the government. So you get money back, which is nice. Now, a lot of students ask me at this point, why don't they just give you less tax? Because not everybody gets the same tax credit. So most people in Ireland get a tax credit, and the tax credit is giving you money off your tax bill, which everybody likes because it means they pay less tax. But some people get bigger tax credits than others. So for example, if you're married, you will get a bigger tax credit, and there's various reasons for that. Most of the reason why is because they figure if people are married, they're going to have kids. Why do they want people to have kids? Because kids will grow up and they'll start working and they'll start paying taxes and they'll be able to pay for pensions. That's one of the main reasons why. You can also get different types of tax credits depending on your circumstances, depending on how much money you make, depending on if you're in difficult circumstances. So everyone has got different tax credits. So that's why they don't just take less money from you, they give you a tax credit. And as you grow up, you can change your tax credits as you're working. So here we've got 8,000 in tax. We no longer have to pay that. We've got our tax credit of 3 grand. So we're getting away with that much. So that means we actually only have to pay 5,000 euros. This here is what's called your tax payable. Payable means you have to pay it. So you can see the difference between gross tax and tax payable. Gross tax is how much tax is your total, but tax payable is what you're actually going to pay. So now what we've got to do is go down and work out our net pay. Now remember what your net pay is. Your net pay is going to be your gross pay. So Jess, in this example, is making 40,000 a year. Then you take away your tax, or your tax payable. In other words, the tax that you have to pay. So your tax payable here is 5 grand. Not 8 grand, because we got a tax credit. We got a few quid back. So we've got to take that away. So that brings us down to 35,000. So Jess, although she's getting paid 40,000 euros a year, is actually only getting 35,000 into her bank account or into her pocket. Okay, we'll go off and we'll practice a few questions in an assignment.